Hello and welcome. You're watching Markets Today on Business Today TV. I'm Sakshi Batra, and this is where we discuss everything about the stock market's opening action to help you understand which way are the markets headed and what should be your investment strategy today. Joining in to help us with all of this, I have a very special guest with me. Mr. Chandan Taparia joins in from Motilal Oswal Financial Services. Good morning, Chandan, and thank you so much for taking the time out. Well, for all our viewers, I wanted to give an overview that the market sell-off has continued today, whether it is about the global markets, overnight US markets, or the Asian markets as well. And that's trickled down for us as well. Nominal losses being seen are right at the opening levels. The Sensex fell about 200, 250 odd points to be around, to trade around 52,650 odd. The Nifty also slipped about 40, 50 odd points to trade now below 15,700 levels as well. Chandan, what are you making of this kind of a continuous sell-off in the markets, and where are the markets headed? Are there going to be, deeper correction levels now from here?
Good morning, Sakshi. We have seen a massive decline in last 2 weeks, and especially on the last trading session when Nifty has corrected by more than 420 points on the closing basis. And recently, in last 7 days, the market has lost almost more than 1,000 points. It made the swing high near to 16,800, and now we are trading near to 15,700. So, it took 4 weeks to get this 1,000 points recovery, but it lost the entire gain in just 7 weeks, which clearly indicates that we are worried from the global concern, and weakness in the global market is waving high on the Indian market. At the same time, we have seen that FI's long short ratio has gone to the multi-months, multi-years low near to 12 zone. That means FIs are 88% shorts in index or in the market, while only 12% long, which clearly indicates that negativity, and that is the reason that market is not ready to spike from any immediate level. However, the good part is that most of the data setup are indicating the oversold scenario, but we need to understand that setup and the structure is weak, and unless global market doesn't recover, such sell-off and the weakness could continue into the R market as well. So as of now, the 15,850 to 16,000 is the key barrier. Till that level is not surpassed decisively, any small bounce could be sold in the market to us 15,500 to 15,350 level. So we are closely watching 15,850 to 16,000 mark as a supply zone, and use this level for any kind of sell on bounce strategy for the downside target in the Nifty index.
Okay, and between Nifty and Nifty Bank, if one was to take a position, what would you really recommend? Is that at all advised?
See, if you compare Nifty and Bank Nifty, actually both are weak. But the good part is that Bank Nifty has not broken its previous recent swing low of 33,000. If we remember, on the 30th of May, just 22 trading session back, Bank Nifty made low near to 33,000, and yesterday we made low near to 33,200. Today we made low near to 33,100. So somehow this banking sector is respecting to this previous swing low near to 33,000. So looking at that, I assume that Bank Nifty has more potential to witness bounce if that happens compared to the Nifty. So Nifty has broken the previous swing low, but Bank Nifty is still respecting to that low. So the technical analysts will give more weightage to the Bank Nifty 33,000 as an immediate level if any kind of recovery. So in Bank Nifty, I'll just look for 33,000 if I have to play the bounce of 200 to 400 points from the current point of view.
Right. But Chandan, where is the hiding place in this kind of a market which is continuously on the decline? You are saying that, you're watching out for critical levels to be, intact on the markets as well. We are seeing all across the board, all sectors in the red, barring just very slight bounce in the IT stocks today. But the kind of deep action that we've seen yesterday, after that, is there at all any sector that you feel may still be able to weather this kind of a storm?
Yeah, so if you talk about hiding place, see, yesterday when entire market was down, only India VIX was up by 12%. But today the good part is even after the sharp cut in the global markets, the Nifty is recovering from the lows, and India VIX is just flattish. So that is giving some sort of stability as of now. Hiding place, if you ask me, then we can focus on the selective auto and textile name. So I believe that auto counter could do well, whether you name from the Ashok Leyland or the TVS Motor or M&M. This is the one of the space which is providing you the relative strength. So if I talk about the stock, Ashok Leyland, the stock is corrected from 145 to 130 zone, taking support at the previous resistance zone. So again, potential for more towards 140, 145 kind of level. TVS Motor is other name which is support near to 730 for a bounce towards 788 to 800 zone. So auto is the one space where we believe the relative strength could be there, or some bounce could be seen in the entire sector as well.
Okay. And in terms of some specific stock recommendations, what would you really advise all the viewers today?
Yeah. So like Sakshi, we were talking about auto segment. So we will continue to remain bullish to the auto name. Whether you talk about the FN auto counter like TVS Motor, Ashok Leyland, or you talk about auto ancillaries from the non-FN or mid-cap name. So I'll focus on counter like TVS Motor, Ashok Leyland, and the Sonacom. So Sonacom is the mid-cap name which is finding stability from last 3 weeks. If I look at the price behavior, even after the market decline, this stock is uh, witnessing the resilience. So expecting some uptick, can buy with support of 580 for target of 635. Apart from that, as mentioned, positive on the TVS Motor for target was 800. So I'll focus on the auto segment for playing this bounce back more in the market.
Okay, so Sona Comstar could be definitely one stock that you could look at from the ancillary pack, and otherwise also auto names would be, some of the auto names actually could still remain resilient in this kind of market. Would you also have any call on the short side?
Actually, on short side, we can focus on the counter which were in the pressure, but we need to understand shorts are suggested only on bounce back move because this market is oversold. So I'll focus on one counter that is LTTS, IT segment. Major trend is weak. Today we are witnessing some bounce, and I believe that this bounce could be sold. So one can sell on further bounce with a stop loss of 3380 and expecting it to correct by 4 to 5% towards 3100 to 3000 marks.
Right. But an overall advice to all the traders looking at some kind of, relief rally, what would you really advise them? What is the time to do right now? Is it time to stay away from the markets or still, continue to nibble into these kind of dips that you're seeing?
See, Sakshi, it's very tough to do the perfect timing in the market.
Mm.
However, everyone knows that they want to buy at lower levels. But you need to understand when market falls and you see something at lower levels, your fear always remains high. When market moves up, your greed always remains high. So right now, more is fear, so price is at lower level. So I believe this is not the time for trader to take the leverage positions because VIX is near to 22 zone. But this is definitely the good time for the investor who are looking to build the portfolio. However, looking at the global scenario, the crude inflation interest rate, it is not advised to buy at a go. So the advice is better to accumulate the positions, go with your selective stock specific activity. If you have to invest, let's say 10 lakh rupees, this is the time you should put 33%. So one third allocation should be there now at the current zone because with the view that market has already gone to the multiple months, multiple weeks low and turning or taking some support. And the rest part you can wait for next opportunity because volatility is likely to be there. Market not going to run immediately, but yes, definitely this decline could be good. So my advice is traders are suggested to remain cautious, but investor can start investing and accumulating with one third exposure, and then initially and gradually they can increase to entire 100% allocations.
Okay, that makes sense for all the traders. Remain cautious for all the long-term investors. Accumulate into your stock selected portfolio with one third of your allocation right now, and thereby keep on looking at the volatile opportunities to add on to those positions as well. Thank you very much, Chandan, for being with us and sharing all the insights about markets and the strategies investors must follow. Thanks a lot for being with us.